Welcome to the tutorial on consignment accounts. Sometimes the manufacturer or a wholesaler market their goods using agents as an alternative to selling goods to a foreign country or in a distance place. If you think that you don't want to open a branch in a new potential market, in that case, consignment could be a good option. Consignment is a kind of business expansion without actually opening a branch in a new potential market. In consignment, you can take help of an agent by paying commission to the agent. In consignment, the manufacturer or wholesaler sent the goods to the agent because the agent has a good knowledge about the local market. That is why the agent can utilize the knowledge of the market for better sale. In this consignment process, the person or the institute that is sending the goods is called consignor and the agent is known as consignee. The agent receives the goods for selling. In the consignment process, the consignee markets the product within his own periphery and receives commission at a stipulated rate on the total sales. I mean, for selling the products on behalf of consignor, the consignee receives commission as well as the consignee receives other expenses which occurs due to the promotion or any other maintenance expense. In consignment process, the consignee will be responsible for selling the product. If the consignee fails to perform this function, he may be replaced by another. As well as if the consignee think that the product is not so marketable, then the consignee can give it up and he or she may not be interested to renew the contract for consignment. In short, we can say the consignee is the agent on behalf of the manufacturer or a wholesale marketer. The consignee as an agent sells the product and he receives the commission as well as the payment for other expenses. What is consignment accounts? Consignment accounts are the accounts recording the transactions relating to the goods sent on consignment. That means any accounts that is maintained for recording the transactions in the process of consignment is known as consignment accounts. So what is the benefit of consignment? I mean, what is the economics of consignment? You can see by consignment process, the consignor can save cost as well as the consignor, I mean the manufacturer, don't need to open any branch in a distant market or in a potential market. As well as it's a simple and more economic way to sell the product with the help of agent, I mean the consignee. To get better understanding about the difference between sale and consignment, we can say that in case of sale, the property, I mean the rights, in goods is transferred to the buyer or purchaser along with the transfer of goods. I mean, in sale, the property or rights in goods is transferred to the buyer. But in case of consignment, the goods remain the property of the consignor. I mean, the rights kept to the consignor until the time they are sold by the consignee. And if you consider the option for return, generally in case of sale, whenever the goods once sold cannot be returned unless there is any defective product or any disagreement. Generally, it is assumed that whenever goods once sold, it cannot be returned without any defective or any other disagreement. But in case of consignment, the consignee can return the product because if there is any unsold goods or unsold product, the consignor should take back the product which will be returned by the consignee. If we consider the relationship in case of sale, the buyer is known as debtor and the seller is known as creditor. But in case of consignment, the goods receiver is known as agent, also known as consignee, and the product or goods producer or manufacturer or wholesale marketer is known as consignor, which is also known as principal. Here the relationship is principal and agent in case of consignment. On the other hand, in case of sale, the relationship is debtor and creditor. If we consider the loss bearing authority, we can see that when goods are lost after delivery to the buyer, it is the buyer who should take the responsibility of the loss. I mean, the buyer will bear the loss. On the other hand, when goods are lost on consignment, it is the consignor. Here, consignor means the producer or manufacturer. The producer or manufacturer or the principal should bear the loss. So, what is the procedure for consignment transactions? Whenever the consignor, I mean the wholesaler, sending the products or goods to the consignee, I mean to the agent, the consignor should prepare a pro forma invoice. It is one kind of invoice that is not like a real invoice. In the pro forma invoice, the consignor should mention the description of the goods as well as the consignor should mention the minimum selling price to be realized. So this pro forma invoice is not a demand for payment. It's one kind of invoice that is sent by the consignor to the consignee. In case of real invoice, the seller mention the goods and service sold, their price and terms of payment in the invoice. But in case of pro forma invoice, the consignor only mention the description of the goods and minimum selling price to be realized. After sending the products to the consignee by the consignor, the consignor makes a record of consignment, giving the details of the goods, the cost price, as well as the expense incurred. After receiving goods, the consignee tries to sell them at the best possible price. It should be noted that only receipt of the goods does not make the consignee as a debtor of the consignor. Rather, the consignee becomes indebted to the consignor when he sells the goods and realizes the money. That means after selling the product by the consignee, he becomes indebted to the consignor. Before selling, the consignee does not responsible for paying the money. Sometimes the consignee may spend some money for the consignment procedure, such as the consignee may pay for unloading charges, the consignee may pay for godown rent, or any other expense. It is the duty of the consignee to remit the proceeds of sales after deducting his expenses in respect of the consignment and his commission. I mean, after selling the products, the consignee should provide the payment, but before providing the payment, the consignee should deduct all the expenses and the commission from the proceeds of the sales. I mean, the revenue generated from the sales. The details of the sale proceeds, expenses, and commission are contained in a statement, and the statement is known as account sales. That means account sales is a statement in which the consignee mention the proceeds of the sales, I mean revenue from the sales, and the consignee also mention the expenses incurred by him, and the consignee also mention the amount of commission in the statement of account sales. So what is account sales? It's a statement that is prepared by the consignee by mentioning the goods sold, price realized, and amount of commission and the other expenses that was incurred related to the sale. Here we can see an example of statement of account sales. This account sales statement is prepared by the consignee, I mean the agent. You can see, suppose Mr. Robin is a consignor, I mean the principal, who sent 250 bicycle to Obaidul. Here Obaidul is the consignee, I mean the agent. And at 31st December, Obaidul, that means the consignee, I mean the agent, forwarded an account sales with the bank draft for the balance, showing the following transactions. We can see the consignee sold 200 bicycle at the rate of 600 and 50 bicycle at the rate of 560, and there is unloading charge incurred by the consignee, that is 500, storage and insurance charge 1000, and commission that is entitled by the consignee at the rate of 10%. In case of this information, the account sales can be prepared in this way. We can see here Obaidul is the agent. He mentioned the sale proceeds, I mean the revenue from selling 200 at the rate of 60, that is 120,000, and 50 bicycle at the rate of 560, that is 28,000. Total 148,000. And from this revenue, I mean sale proceeds, the consignee should charge the unloading charge, that is 500, storage and insurance charge, that is 1000, and commission at the rate of 10%. We can see this is the sale proceeds, I mean revenue. On this sale proceeds or revenue, the commission is 10%, that is 14,800. Total 16,300 would be deducted from the sale proceeds. Ultimately, the consignee will pay 1,31,700 to the consignor, and this statement is known as account sales, that is prepared by the consignee, I mean the agent, and that account sales will be sent to the consignor as a statement of account sales. Thank you. This is the first part of this tutorial. In the second part, we are going to learn about the entries that should be recorded in the book of consignor. Thank you.